Good evening, guys. Welcome to today's session of Decoding the Charts. My name is Samson Mzera, and I will be taking you through market structure. So the title is written Advanced Market Structure, but we will start by simplifying things a bit and then proceed to a more advanced version. And it's simply advanced because we're trying to remove the confusion when it comes to market structure analysis, and it's also a primer for what we're going to do next in the next session on Wednesday, which is supply and demand. So this is very crucial for that piece. So hope you can follow through with both. So I'm going to try and make this as practical as possible. I'll have to share my screen. Yeah. Okay. I think my screen is visible. If you can hear me in the comment section, in the chat section, simply say hi while we start. Okay, so we're going to go together on this one. And the first thing, I'm going to start by defining market structure before we do any drawings over here. So market structure. So market structure is the condition or the flow of the market. So the condition or the flow of the market. Now, this can mean a lot of things, and it's very abstract. It's a very abstract concept, even for those who are new or are just starting with regards to trading. So it's one of these techniques where they are not so new, but they're new because a lot of traders are using them in conjunction with other concepts. But it's essential in understanding what it is you're looking at whenever you open a chart. So the most non-abstract definition of market structure is the state of the swings in the market, if I may put it so. So imagine the market is going upwards or is flowing upwards. It will probably look something like this. Yeah. So in this case, market structure can be defined, and this is an uptrend, as, for example, in this case, we can define this as an uptrend as a series of, this is a higher low. So let me call this a low. This is a low, and this is a high. Yeah, so if you're looking at a chart and you're seeing a high and a low, and then a higher high, like that, a higher high, and a higher low, higher low. So it will go on like this for some time. So in this case, we'll have that way, then that way. So if you're looking at the chart and you're seeing a series of higher highs and higher lows, number one, you can define that as an uptrend. But number two, what is the structure of the market? So in this case, we have turning points used to define structure. So generally, when you're looking at charts, you're attempting to position or to describe how the turning points are appearing as you go through the chart. So the analysis of turning points on a chart is the analysis of market structure. And sometimes these turning points can prove very complicated. So we'll start with a simple model and then go to a more advanced model. So in this case, for example, if we call this a high, and then we have, let me change this. And then we have price break this high here, then we will call this a break of structure. So this will be called a break of structure, or simply BOS. Yeah, like that. So if prices form a high and then a low, and then they go past the previous high, we call that a break of structure. Yeah. So in a normal or in a simplified market structure model, we have a series of BOSs going up at every stage like that. Now, this is crucial in being able, because a normal chart wouldn't look this simple. This is a simplified version, and then you go to a more complex version. So in this case, we have a series of points where the market is breaking structure to go higher. Remember, market structure is the analysis of turning points in the market. So the turning points in this case are this one, this one, this one, this one, this one, and this one. Yeah. And in this case, they're heading higher. So let me just mark them. So there's this one, this one, this one, this one, this one, and this one. Yeah. So in the case of a downtrend, you will have the opposite of what we're seeing, which should be a series of lower lows and lower highs. So in that case, first we will define a downtrend as such. Yeah. And then if this is a high, if you can hear me again, just say hi on the comment section so that I know that I'm audible. This is a low. This should be a lower high. And this one right here should be a lower low. Then, so now we'll just use acronyms, lower high, and this is a lower low. Yeah. Okay. So again, in this case, if you're analyzing turning points, then this is the most recent turning point, the most recent low, and the market went through it over here. And then we had this other low over here and this other low over here. Yeah. Hello, Rebecca. Hello, Get to President Kenya TV. Okay, nice to hear from guys. Okay, so ideally, when you're looking at a chart, you either see this or you see this. And if it's not any of the two, then what you'll be looking at is, chances are it's something like this. Yeah. Equal highs, equal lows. Okay, so if we were to go to a chart, let me just share my entire screen. If you were to go to a chart, for example, this one, it doesn't look like what we've drawn over there. This looks nothing like what we've drawn over there. What we've drawn is a series of simple highs and simple lows. This looks more complicated than that. Yeah. Now, the problem, especially when you're starting out with market structure, because in this case, if I was to convert this to a line chart, maybe it will be a bit clearer, but still it does not look as simple as what we had drawn. So now the question is, how do I know which point to use as my higher high, which point to use as my lower low, and so on and so forth? And that's where the problem comes in, especially when you're starting out to trade. So we're going to go back to this over here. And now instead of having a very straightforward structure like this, let's have something that looks a bit more realistic in terms of market structure. Okay, so before we go on, the context of this is to be able to know how to interpret the current flow of the market as per in the definition. Yeah. And once you're able to know the current flow of the market, you're able to anticipate moves in the market. Trading at its core is the analysis of turning points, and these turning points are what you use to get into the market. So if you can have a clear mastery of turning points without indicators, then you're home and dry with us, in as much as a big portion of it is concerned. So a typical chart will look, maybe you have a push, sorry, will look something like this. Yeah. Or let me give it more room so that we have more to work with. So I'll start with here. Just a minute. So if you have a push like that, something like that. So a typical chart will look something like this. It won't look like this. This is very simplified. Yeah. So the question now is, how do I know what to choose as my higher high, my higher low? And how do I use this? How do I even use this as market structure if it doesn't make sense at all? So we introduce the concept of identifying the impulse move in this structure before even knowing where to use as a reference point. So in this case, this is how our market would look like. And this is what our chart here looks like. It doesn't look simple and straightforward with well-defined swing points. It's more chaotic. It's more rugged in structure. So how do you simplify what you're seeing here into this basic concept over here? Yeah, now that's the question. So we'll use the actual chart when it comes to examples. I want to scribble down a few points before we get to the chart. So I can't necessarily write these things on the chart as of yet. So the first thing is we attempt to identify the concept of an impulsive move. So an impulsive move, take for example, this section over here. The impulsive move will be this one, impulse move, which is the initial move. So this will be a reference move from the previous swing. So in this swing from, let me use from here. In this swing from this point to this point, if that is our impulse move, then anything in between our impulse move is called internal structure. That means anything between here and here, actually this point here, anything inside here is just internal structure. Yeah. That means to the point where we have a break of structure, that's when we can now identify our new swing high. So this won't be a higher high. This won't be a higher low. Yeah. This won't be, okay, this can be a mini downtrend, but this one here shouldn't confuse you as a higher high or a higher low because we haven't yet broken structure. So you haven't yet had our break of structure like that, which is on our previous swing point. Yeah. Once we have broken structure as such, and once we've had this move, yeah, break the structure, then now we can identify this as a higher low and this here as a higher high. Yeah. Now that becomes clearer because now, let me carry this here. That becomes clearer because now our reference or our impulse move is this one. Yeah. I hope that makes sense. So now everything between this point and this point is just internal structure, way up to we break the previous high again. Yeah. So that's how you're able to discern what is working and what is not. So let's quickly jump onto the charts and identify the same concept again. So I'll start with a gold chart. Let me just zoom this in. Okay. So I'll start from this point over here. So that we can save time. I'll start from this point over here. Yeah. So what happened? We had this here. Okay, let me just highlight it with this. We had this here, this point over here, as our minute. Like that, much better. Okay. So let me remove this. Okay, so even before we get to this, we had this here as our final swing low from here to here. Why? Because we had this low here being broken finally from this point. So this was our impulse move downwards. Now for us to see a change in trend anything that's between this high point over here. So I'll mark this small bit over here, over here. Yeah, so this high point over here and this low point over here, anything inside of it is just internal structure. There is nothing really that you should use to reference a trend, because this is still one swing and it hasn't been broken lower. Why? Because the previous swing point, which was this one, made a low here. And you're going to reference the next move with the one that broke structure from the previous low. So this is going to be your reference move, even when you're looking for a change in the trend. So if we extrapolate this further like that, then now we're able to see, okay, so since this was our most recent high and this was our most recent low, it's up to the point where the market either breaks this or this that we will continue defining our turning points. And in that case, we had this push over here. Yeah. So this entire move over here broke what? It broke market structure, because this was the most recent swing move. And when you look at, for example, this move over here, it failed to go higher than this swing point. So this is internal structure. Yeah. So once you have a break like this, let me just zoom out. Okay. So once you have a break like this, then now you can begin to look for other swing points. So we had this break over here like that. And then now this becomes our swing high move. And then from this, we can now attempt to know where the swing low is. So that makes it a bit clearer. So now I can come here and mark this as, this should be now my higher low, like that. And this here, that will be my higher high, like that. Why? Because it's broken that initial move, like that. Again, then here you have a series of much smaller swing points, like that. Now, what becomes our reference next is this over here, this small one over here, yeah, which was broken. So it becomes a bit easier when it's straightforward at the moment, series of higher highs and higher lows like that, yeah. But then when we get to this point here, when you get to that point, then it also starts becoming a problem, because you have all these down here. So if I was to use this as my, I think this and this are equal. If I was to use this as my most recent high, then everything below it is just internal structure. And where is my swing low? My higher low should be this one, the last one before we actually had an impulse move higher. Yeah, so I hope that clarifies, especially when we have the market being very choppy, when you're attempting to define a trend. So let me just clear everything and try and use a different chart for us to attempt to understand again. Okay, so this is a chart for USD JPY. Same story here. Let me just push this down. Same story here. What do we use as our swing highs and our swing lows depends on where the most recent structure was, or where the most recent turning point was. Yeah. So in this case, now we're going to try and use candles instead of the charts. Okay, take a look at this move over here. From here to here. Yeah. Do that. Yeah. This is one impulse move. Assuming this was the most recent high, like that. So if this was the most recent high, and this is your impulse move from your most recent low, then anything in between here becomes what? Internal structure, up to the point where we have a break in structure. So you will define your swing high and swing low as this entire move here, and then this entire move down here, and then a break out of this. Now this now becomes your new reference impulse move, from which here and here. So now it will be this one, this point over here, and this point over here. Just a minute. Let's put this here. Like that. So now it will be this point and this point having been your reference moves. Yeah. So let's go back to the simplified diagram and then come back to this. So if we go back to this diagram here, like that. An uptrend is a series of higher highs and higher lows. A downtrend is a series of lower lows and lower highs. Uptrend continues so long as the previous movement, this one, breaks the previous high, like that, as you go higher. So if we print a new high, the only time we start looking for a higher low and a higher high is after price has reached the previous high, which is this one. Yeah. Then this becomes our reference move. So whenever you have the trend doing this, then we are still inside this, we're still inside this reference move over here. So no matter what happens between this point and this point, you don't really have to be too detailed. You don't have to have a lot of analysis paralysis, because you know your reference point is this and this. So whatever happens inside is okay up to the point where we break the previous high to go higher. Once you've gone higher, then now your new reference point is where it stands and the most recent swing low point. So whatever happens inside is internal structure. So that usually has a good effect of reducing the confusion when it comes to the market. So we're going to look at a chart for gold, a setup for gold that we've done today. And gold has had quite steady market structure. Excuse my drawings, but gold has had very stable market structure of late, and it's a good chart to look at. So you can either use the daily time frame or the H1 time frame to identify higher time frame market structure. Yeah. So in this case, what did we have? This is a stable downwards trend, and you can define clearly where the swing highs and swing lows are. So if it's confusing, always just revert to a line chart. It will assist you. So from here, I have my impulse move downwards. So remember to also ignore the very minute changes in price. So now this point up here and this point down here is my reference. Yeah. Up to the point where market structure has been broken as such. And then after prices broke, the moment prices broke this structure like that, then now my reference move is this one. My new reference, not whatever this was here. Yeah. So this will be my low. Sorry, this will be my high, and then this will be my low. So in this case, we had a sideways range. So I can just do that to that point. But if it's a sideways range, then well and good. You can just extend it up to the next support line. We'll talk about support and resistance lines. So now, since this is my impulse reference move, the only time I will start looking for a new impulse move, or for a new, I'll just join that and that. The only time I'll start looking for a new move, a lower low, is when this here has been broken. So you can see that at the moment, price had attempted to break it over here, but it failed. Yeah, we went back up. But since we've not gone past this point, yeah, this is my reference move. Since we've not gone past this point, we are still in a downtrend. Yeah. So the moment we had this move, which was the last move before we had a break lower like that, then now this becomes my reference move, for which I can use to identify the next impulse move. Yeah. So I won't call anything unless we either pass this point or we pass this point here. Yeah. Yeah. So if you are to pass, if the market was to come back and pass this level, then we call that a change of character. If the market was to come, for example, like as it did and break here, that will be called a break of structure. So a change of character is when the market shifts from being a downtrend to being an uptrend, while a break of structure is when the market just breaks the previous swing point. At the end of the day, you're still analyzing turning points in the market. So I'll just put this here as a change of character. So I'll just do that. So this is a change of character if the market breaks the previous reference point. But if it continues in the same direction as such here, then this will be called a break of structure, like that. Yeah. So in this case now, our new reference move, so I'll remove this one. I'll just leave it there. I hope you're following with all these drawings. So then the next move here, because this is our reference point, this move over here, we had this break lower. So from the start of that move is where your new lower low is, and the end of that move is where your new lower high is and where your new lower low is. So now this becomes your reference move, and you do nothing until you know that this has been broken clearly to the downside. Yeah. So the other problem now is let's try and redefine a change of character clearly on our Jamboard on Google before we continue. Okay, assuming the market is trending upwards and you have a series of clear higher highs and higher lows, that means you have that. Anytime the market makes an impulse move, you know that this point over here and that point is our reference. So in the event that we are, the market is moving in and about these 2 points, it's still an uptrend. When do we have a change of character? We have a change of character when now the market comes and breaks this level over here. So if we do that, then the market has changed its character because it's no longer forming a series of high highs and higher lows. Now this becomes a new impulse move that now you have to take note of. This entire move from the previous point here to this point over here. In that, anything that happens between here and here is internal structure. So in this case now, I can call this here change of because we have broken this point over here. Yeah. So anything that comes in between this point and this point, if the market does that, we are still in a recent higher high and a new lower low. Yeah. So now it's important to just get this straight. The same thing happens when you are in a downtrend. So for example, if you're trending lower like this, every time we have this impulse move here and this impulse move here, the same as this one and this one, the only time you look for either a break of structure or change of character is when either one of these is broken. So in this case, if we have the market doing this, then we will have said, just a minute, we'll say that the market has changed its character because now it has broken the consistency it had. Yeah. A break of structure, remember, is in line with the trend. So in this case, this is a break of structure because it's in line with the previous swing point. So a normal trend will be breaking structure every time it goes lower and lower, but a change of character is now when we have this consistency being violated, and now we are having a move higher past the previous swing point. So let me go back to the first chart here. I think it will make sense. Every time the market moves past the previous high, that's called a break of structure. However, if you're having a series of high highs and high lows, and then the market does this, it goes lower past the previous higher low, then that means that's a change of character. So that's the difference between a change of character and a break of structure. Yeah. Character is its consistency as it moves along. Remember, we define market structure as the condition or the flow of the market. So if you're going higher, that's the character. It only changes when you stop seeing higher highs and higher lows. Yeah. So let me give a small example when we wind up. This is what we are going to expect on Wednesday. So Wednesday, we're going to combine this with supply and demand, and then we're going to have a more concrete example to give. But on Wednesday, we'll be identifying an impulse move, and that's what we identified today. So I'm going to give an example of a trade we took, and then that's going to be the primer for Wednesday's class. So gold has been trending lower. Sorry with the cluttered chart, but this is the chart I'm using currently for analysis going forward. So the most recent swing point was on Thursday last week. So on Thursday last week, we had this push downwards here. We had the market doing that. So remember, it broke initial structure here, over here. Yeah. So let me just remove this. It broke initial structure, which was this lower low over here. Yeah. So since it broke this initial structure, what is my reference move? My reference move is this. Anything that happens inside here is internal structure. Why? Because it's either it breaks the previous high or the previous low to continue lower. That's when I'll continue seeing it as a, a downtrend and a continuation lower. But anything that happens between here and here is internal structure. So because this is my reference move, on Wednesday, you're going to do supply and demand. We marked this last candle, this last upwards candle before the downward move. Yeah. So there was news on for the person asking what caused the push. There was news on Wednesday. This was it the minutes? Yeah, there were minute news on Wednesday and PPI. So that caused the market to continue going lower. So since this is our reference move and we've marked the last candle and extrapolated it to the future. So this gray has been extrapolated. So let me just have a clearer chart on gold somewhere else. You can use this. So, okay. So this is the chart for gold. It's a solid downwards trend. And this was our last move. So this was the last impulse move from here to here. So since the market hasn't broken either this point over here or this point down here, like that, then this continues to be our reference point up to the point where it either does that or does that past this reference move here. And if it's confusing, just go back to where we started with the basic drawings. There was news on Wednesday and Thursday. One was for MC minutes, the other one was PPI, if I remember correctly. So those ones made this thing continue going lower. So because this is our reference move over here, what we did today, which is what we're going to practice on Wednesday, the same session at 8 p.m. is we use the last candle here. So this last upwards candle before the downwards move, and we extrapolated it like that. So we had this push here, which was our reference move, and this was the last bullish candle or the last upwards candle before we had these black candles or this downwards candle. So this was our reference here. So coming into today, now one thing you need to know is market structure is fractal in nature, meaning the principles that apply on a higher time frame apply on a lower time frame. So on a lower time frame, M5 to be specific, what were we looking at? We were looking at price to rally. That's why we had drawn these arrows here in the morning. You'd drawn some arrows at around 12 in the morning. You're looking for price to rally back to this region here, that if you look on the higher time frame is what we had highlighted on H1. So once prices rallied here to this marked region, we're going to do supply and demand on Wednesday. And it entails spotting reversals in the market. So there was a small upwards trend that we're looking for it to reverse. And indeed that happened. Once price rallied to this point over here, it made a higher high. So this is the impulse move. And then what happened? Actually, no. Now here you're using candles like that. Just a minute. So you can use the 1 minute chart after you've done analysis on the higher time frame. So it's allowed if you already know what you're doing on the higher time frame. So we had prices forming higher highs and higher lows like that, breaking initial market structure. So at this point, it can be a bit confusing because you don't know exactly which move to use as a low and which one to use as a high, but just bear with me. Once you practice, you'll get the hang of it. So in this case, we had price breaking initial structure. So remember, our initial reference point was this one. So remember, market structure applies even to the 1 minute. So we had that, and then we had that over here. Market failed to break. This was a okay. So yeah, yeah. So this was our initial reference move. We came in, moved between this point, went higher. So now our new reference point will be this low over here and this high over here. Yeah, but what happened? The market went higher. So now our current, on the most recent current impulse move, it will be that low over there and that high over there. And what happened afterwards? Instead of the market attempting to go higher, it finally broke structure past this initial reference point. So that's where the trade came in. We are looking for reversals. We'll explain supply and demand on Wednesday, but technically what you observe on the higher time frame, you're also going to use it on the lower time frame to find entries. And in that case, since we broke the previous high, then that means we've changed character from being an uptrend to being a downtrend. And in this case now, you're going to use other techniques, but generally speaking, because we've changed character, once you see our push back inside our new reference move, which is this one. So now our new reference move will be this point and this point. Then I'll be looking to see within this reference move, where exactly can I enter to continue going lower like that. So now that was where our entries came in. But the important thing here to note is that trading is a science where you're trying to identify turning points. And turning points, you can use market structure where there's a change of character to enter the market. So that's basically what you're going to learn on Wednesday. But for today, being able to clearly identify the swing points and sifting through the many swings on the chart is very important. A pro tip is ignore the minor swing points whenever you can, and always practice and train your eye to observe market structure clearly. So in this case, we had a failed push and this point here. So I think I can mark this as our break of change of character here. So we had this. Yeah, so I'll mark this point. Like that. Yeah. So the previous reference move broke it, came back up, waited for it to fail to go higher, and the candle patterns, and then that's when it took our low back down. It was a very clean move. It was a very straightforward move, but the concept remains the same. Identify market structure on the higher time frame, and then use it to find lower time frame structure that is in line with the higher time frame structure. So the higher time frame structure was a downtrend. So what we basically did is we waited for that downtrend to also occur on a lower time frame, and then we took a trade. Okay, so just a recap of what we've done, so that we are on the same page. We're basically identifying market structure. The simple textbook example is this: a series of higher highs, higher lows, higher highs, higher lows. You're analyzing swing points in the chart. So once price moves past a recent high, then that's called a break of structure as you go to a new high. And then now this becomes your reference move. Either price breaks this point over here or this point over here. In this case, we broke this point, and that will be a break of structure. So we continued going higher and so on and so forth. Yeah. Same thing applies to a downtrend. Series of lower lows and lower highs. And what happens if we, for example, between this point and this point, if we went past this point, then that's a change of character. Yeah, so I know the indicators for this, but it's probably, when I started trading, I was reluctant to use market structure, price action, because it was very hectic. I was always adamant on using indicators. But at the end of the day, just learn how to read the charts without the indicators. It's going to save you a lot of time. I know market structure is a lot of work, but if you can learn to read the charts without indicators, the indicators will be better for you once you plug them back in. Yeah. So now we moved from this simple model of higher highs to higher lows to saying the market can look more complicated. And that's where our impulse moves become very important as points of reference for when to know the structure has been broken higher or lower. Then that's moving away from that, we identified a change of character. And from there, we went to our charts. And from the charts, we're able to see how although this is now supply and demand, we used our trading concepts here to know that since we are generally on a downtrend, like this, since you're on a downtrend, I want to be looking for these mini reversals on lower time frames. So we have that, where prices pulled back. Those are mini uptrends on smaller time frames. Now, on those smaller time frames, am I able to get a reversal entry back in line with the largest time frame, which is downward trend? Yeah. So that's basically it. So because today we had this mini uptrend over here, which we are going upwards, then on M5, it's clear that since we had an uptrend like that, we are looking for reversals to take it lower. Very straightforward, very direct. But for today, it's important to practice how to identify swing points in the chart, what is a break of structure, and what is a change of character. If you are home and dry with those, then the Wednesday class is going to be a bit more straightforward than this. Because now we'll be saying probably look for an entry on the change of character, wait for the break of structure, and things like that. Having said that, I hope this was useful, and always rewind just to have a clearer understanding of what's going on. And enjoy the rest of your evening. We do have a lot of speakers this week, but the main event is on Friday. Powell is going to be talking. The expectation is that it's still going to be a strong dollar. So this trend hasn't changed. Again, if you're looking at this trend, it hasn't changed until we pass this point over here. Then that's when you can start saying gold is in an uptrend. But since price is between this point and this point, then we haven't changed our reference point for now. So when you're doing analysis, it's good to take note of that. Having said that, enjoy the rest of your evening and see you on Wednesday for the online class. We have beginner classes on Zoom. You can just look up any of the FX Pesa socials and then request to have the absolute beginner classes registration link. And then from there, you can have the absolute basics before you get into some of these advanced classes. My name is Samson Mzera, and it's been a nice session. It's a bit complicated because it's market structure, but you'll get the hang of it when you practice it. Enjoy evening, guys.